It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Yes, welcome back to the Real Estate Breakfast, tracking the latest moves in the Australian property market and streaming right now on Spotify and Apple Podcasts. Nice to have your company this morning, and we're covering regions like Cairns to Hobart and from Perth to regional Australia. Yes, we really are covering the entire country, and another property weekend. It is behind us. Did you have any luck? Were there tears of joy or tears of misery? Yeah, only two options these days. The highs and the lows of weekend property searches, eh? Perhaps if you missed out at the weekend, something is going to fall your way in the next few days. It is a Monday, July the 27th. Now, Sydney's housing property market is facing a major generational shift, with new data showing home ownership has fallen to levels not seen for decades. Rising property prices, limited housing supply and increasing rental demands, yes, these are all the culprits that are changing the way that younger Australians are approaching the housing property market in this moment in time. So is Sydney becoming a city where renting long term just is a fact of life? You know, it becomes the reality for more people. Right now, let's take you to Sydney and catch up with Mathew Tiller. He is the Head of Research and Business Intelligence there at LJ Hooker. And welcome back, Mathew, onto the Real Estate Breakfast. Yes, home ownership in Sydney, it has fallen to its lowest level since the 1950s, which really is highlighting the growing gap between these wages, property prices and available housing. Is this, do you think, a temporary affordability challenge, or are we seeing a long-term structural change in how Aussies access property? What do you think?
Yeah, good morning, Craig. Well, I think Sydney's home ownership rate is basically putting a number on what people are already feeling. It's taking longer to buy, it's costing more to buy, and renting has become much longer stop than most households would expect in the past. We have seen that, these numbers from KPMG do show that ownership rate fell from 2001 to 2025. Over that period of time, there are a few factors that have been put in play here. We are seeing higher interest rates. We are seeing more cost of living pressures. We are seeing affordability deteriorate over that time. And that has all come into play, and seeing less people be able to buy, less first home buyers, less younger families be able to purchase their first home.
The age bracket of people getting into their first homes, it is getting older and older because that is being dictated by the current set of conditions that first home buyers are in. Government support programs, they have helped some buyers enter the market, but if enough homes are not being built to match population growth, which is a root cause to all of this, how can affordability improve? So many people are asking that question. Or will this be a case of more Aussies continuing to delay home ownership?
Yeah, you're right there, Craig. The biggest issue is supply. Rates and government incentives and programs will change and move up and down over time. But unless we are building enough homes to keep pace with population growth, affordability stays under pressure, not just from purchasing point of view, but also from rents and rental growth as well. Vacancy rates will remain low, rental pressure will increase, rental affordability will deteriorate, and that means saving a deposit to purchase a home becomes harder and harder.
Yeah, the rental pressure, if you look at the number of renters in Sydney at the moment, it has increased significantly as more households compete for fewer properties. Rental affordability, as you rightly say, has become one of Australia's biggest housing challenges. No easy fix coming down the road to alleviate all of this rental stress. It is a complete nightmare where Sydney's rental market is, and Sydney's housing shortage is influencing decisions beyond the city itself. More and more younger Australians funds are considering regional areas or interstate locations. What a talking point. I've been doing this a long time, Mathew. This is such a big deal with regional Australia just taking off. Do you think that this trend could reshape population growth patterns across Australia, perhaps over the next decade?
Well, I think it's already having an effect on intrastate migration and interstate migration as well. From this data set, we've seen WA and Queensland have actually seen a lift in home ownership rates since 2021. And that's purely because of the affordability of those states, not just for housing, but also just cost of living for rental markets as well. So we're seeing more and more young people pick up from the more expensive states, being Sydney, Melbourne as well, and move to those more affordable areas where they can get a job and have lower cost of living.
We were talking just on Saturday, this next RBA meeting is going to be very interesting. Higher interest rates, they have added another layer of difficulty for buyers, particularly those trying to save for this wretched deposit while paying, rising rents. If you are an aspiring homeowner, the challenge isn't just securing the finance, but also having enough time and financial breathing room to enter the market. It's kind of like one step forward, half a dozen back.
Yeah, that's right, Craig. The latest unemployment number shows that the labour market is quite tight, and combine that with the ongoing inflation pressures and the geopolitical conflicts that's happening overseas, there's no certainty that interest rates are going to be coming down anytime soon, and in fact, more likely going up in the next couple of months. So there is still some pressure on property markets. It is going to be harder for those to save that are willing to save for a deposit. And it's also going to put pressure on rental markets, again, extending that time to save out a little bit more, because we're just not seeing the supply in the market at the moment. We're not seeing the buyer demand in the market for the construction of new developments to start as well. Yeah, it's a bit of a tough time at the moment for those looking to get into the property market.
Yeah, and I mentioned on the weekend, Tuesday, the 11th of August is the next RBA meeting. We will have to wait and see. What's your prediction? Have you got one at the moment in terms of if they're going to move on the cash rate?
I think we'll probably see one more increase, Craig, and then we should be in for a period of pretty stable rates before hopefully coming down sometime mid to late 2027. That's my prediction.
We are talking to Mathew this morning. In just a moment, we're going to have a look at some of these numbers to highlight. That is all coming up after this.
From first-time home buyers to seasoned investors to breaking property news. Discover the stories behind the real estate. Remember to follow us on any of the podcast platforms so you never miss a real estate podcast. You can follow us on Apple, Spotify and Amazon. Know your property with us.
Yes, let's have a look at Sydney and Melbourne because they have had the largest falls in house prices. This is the data from Domain's June property report. And if you look at Sydney, well, at the moment, it's hovering around that 1.73 million median price. The quarterly change there, minus 3.3%. Melbourne, just over $1 million and change. Their quarterly change, minus 3.1%. You go down the list, you look at a Brisbane, hovering around 1.2 million at the moment, and that is on the positive front, 0.4% for the June quarter. Adelaide, 1.1 million, up 4.8%. Canberra, minus 2.5%, just over $1 million. Perth, yeah, real big standout, isn't it, Perth? Over 1.1 million. The quarterly change was 1%, but the annual change at the moment for Perth, 22.5%. No wonder we're always talking about Perth. Hobart, 818,000. That change in the quarter, 1.7% rise. Darwin, 612,000 and change. That quarterly change, 1.2%, and an annual change of minus minus 3.1. Boy, there's a lot of talking points there, Mathew, isn't there? What really sort of stands out for you with the Domain House price report for June?
Yeah, I think what stands out is the real diversity of growth that we're seeing right around the country at the moment. And as you said there, two largest capitals being Sydney and Melbourne, quite soft at the moment, or declining, if you like, while some of those smaller capitals are still continuing to see price growth. So I think that just really demonstrates that, the Australian property market isn't one big property market. You really need to drill down into those micro markets just to see what is driving each of those individual areas, regions and cities.
Yeah, I didn't mention too with the annual change in Adelaide for the last 12 months, 16%. Gee, it keeps on going, doesn't it, the Adelaide market?
Again, affordability is what's driving some of those smaller markets. We've seen a bit of positive economic and population growth go into Adelaide, Western Australia, and combined with being more affordable in terms of a housing market compared to, say, Sydney and Melbourne, that has attracted a lot of people into those states.
And should give a shout out to Hobart because your annual change is almost 11.7%. So that will surprise a few people, I think, there in Hobart.
Yeah, absolutely. I mean, Hobart's been soft for a while now, along with the economic conditions down in Tasmania. But again, affordability has seen an uptick in demand from people looking to relocate into Hobart, but also supply has been very tight down there in Tasmania as well. And that's what we're seeing in some of these other capitals that have experienced strong price growth. I mean, Perth, for instance, double-digit lows in terms of listings on the market for sale have been very tight. Sales volumes are down because listings have been at almost record lows.
Yes, in Brisbane, I mean, it just continues on its merry way. While we say on the quarterly change was only 0.4%, 16.4% with that annual change, and more to come for Brisbane. I mean, all the pointers are there, aren't they?
Yeah, that's right. I mean, from an economic point of view, Brisbane and the Queensland market has been, I suppose, the standout for a little while now. We have a lot of infrastructure going into the Queensland market. We have the Olympic Games obviously coming up, and we're seeing a lot of population moving from the southern states up into Queensland for the lifestyle, but also to help with affordability, cost of living pressures and things like that as well.
All right. Great to catch up with you, Mathew, there from LJ Hooker. Enjoy your Monday, enjoy your week, and thanks for coming on to the Real Estate Breakfast this morning.
Always a pleasure. Thanks for having me, Craig.
From interest rates rising, a shifting landscape, rentals running hot, clearance rates, a tight rental market, buyer-vendor sentiment. We cover it all every morning from 6 a.m. on the Real Estate Breakfast.
Lots of high-rise developments occur. That in itself can help change a price point.
As a buyer, it's very important that you do your research up front and understand how long the buyer's agent has been a buyer's agent in that particular area.
7 children living in tents at night.
Yes, it is completely outrageous. Surely there is room in the budget to help people like this.
Most of these investors are aware of the challenges, but they have the long view and they're looking at where Melbourne is on the property clock. Brisbane's moved, Sydney we can't afford, Perth's moved, property clock is sitting at the right position for Melbourne.
And so the idea that first home buyers get older is absolutely logical. If house prices keep going up, it takes longer to save money to begin with to actually afford that home, that down payment. We are now shifting more and more into a knowledge economy in Australia.
We connect you to the best real estate information across Australia. The Real Estate Podcast.